years and years, there was a very clear hierarchy among the toy companies. You had Hasbro, the top dog, up more than 90% over the past 5 years. And then you had Mattel, that mangy mutt with a dog-like performance, down nearly 50% of the same period. And then you had the rest of the industry, too really small to mention. Hasbro was just better. They had great businesses like Transformers, Nerf, My Little Pony, Play-Doh, a bunch of games, everything from Monopoly to Magic Card, Dungeons and Dragons. They had the best licensed toys. Hey, Disney, think about that. Star Wars, Marvel comic action figures. But on Friday, the two big toy makers kind of flipped the script here. Mattel reported a solid top and bottom line beat for once, and its stock folded 23% single session. Hasbro reported a big shortfall, reporting it was more than 30-cent earnings miss on the bottom line, with sales coming in lower than expected. The reason, turns out, Hasbro's big brands were hit extra hard by the liquidation, the endless liquidation of Toys R Us, something that's been continued theme since, well, I don't know, since they went under last year. Initially, Hasbro stock got obliterated, tumbling from 93 to 85, its lows on Friday. Then the thing rebounded dramatically, closing at 89 and change after a more optimistic conference call. It was a great one. Management explained that the company would return to growth this year as they anniversary the Toys R Us liquidation. I think this is a very well-run company, deserves the benefit of the doubt. It's been a rough time, though. So let's take a closer look at Brian Goldner. He's the straight-shooting chairman and CEO of Hasbro. You hear more about the difficulties in the fourth quarter, but also why things are going to get better. Brian, welcome back to Mad Money.
Hi, Jim. How you doing?
I'm good. Now, you said it point blank. You said, listen, these problems, finally, with this Toys R Us liquidation are finite, and you're going to leave them in 2018. But how do you know? Because I keep feeling that there's toys in the channel everywhere from Hasbro that were never meant to be there.
Well, remember, from 2012 to 2017, we generated an average revenue growth rate of 5%. Our net earnings grew double digits. We expanded our operating margin all before the Toys R Us bankruptcy. It was a disruptive year. It interrupted our growth. And in 2019, we returned to growth. And we believe that over the next year or two, we get back to where we were and we drive forward. We have an amazing array of products and toys and games and brand initiatives. And we have cleaned up inventories. In Europe, the retail inventories are down 27%. In the US, retail inventories are down 24%, minus 6%, absent Toys R Us. So we're really set up for a great 2019 with many of the major initiatives you were talking about.
Now, tell us about what, let's do same store. Inventory that was not with Toys R Us, how did those new products do so that we can get a fair like-for-like competition going rather than just look at what was in the channel?
Yes, what's really interesting is we have many brands that have been growing over a number of years. Nerf, for example, had been growing double digits over the last 5 years. That's the kind of brand that Toys R Us would support really substantially. Our games business, similarly, had been growing over a number of years, and it had been supported by Toys R Us. Others have commented that their big brands that had been perennials had been supported by Toys R Us. Whereas where we have big brands with new initiatives, Transformers in the fourth quarter was up substantially behind brand new product around Bumblebee and the movie, and it did really well. Monopoly was up, Magic the Gathering, Dungeons and Dragons, a whole host of quick strike initiatives from Lost Kitties to Yellies. We've seen some growth in other games of our business and great momentum in our Play-Doh business. So what we see is that brands that had been supported for years by Toys R Us clearly were impacted. We see it as a disruption and an interruption in our growth. But as we go forward, we're absolutely confident that we get back to the growth trajectory that we had been on over the number of years.
Well, one of the things that most excited me, obviously, during the Toys R Us period, you have pivoted to a digital-first retail mix. And also, this is the first time where I start hearing things like Nerf Fortnite, and I hear about Magic. I'm starting to think about what happened with Electronic Arts in the last few days. You may have some Battle Royale kind of features buried within Hasbro that are about to come out, don't you?
We really do. In fact, we've been working for some time on Magic Arena. Magic Arena is an online game that you can play Magic the Gathering. We're in open beta right now. Just through the fourth quarter in our open beta, we've had 350 million people play the game. They're spending on average 8 hours a week playing the game. We've just announced our esports initiative. We've got a $10 million prize pool. We've got more announcements about when we'll launch. We'll have pro players playing Magic the Gathering. It's now a top 10 game on Twitch being viewed. So there's Magic the Gathering. In terms of Nerf, a brand new array of innovation coming for that brand. Fortnite is certainly coming in the spring, as well as Overwatch. As we get into the fall, we're going to have more proprietary innovation, and frankly, innovations that we aren't going to present quite as early as we used to. They're protectable, and we want to ensure that the consumer insights we're garnering and the innovation we're creating, we're not sharing too early with the world, because it's a very competitive category.
Now, do you think, is that part of the reason why I was quite surprised you still put through an 8% dividend increase, even though obviously there were Toys R Us problems? I mean, you must clearly think that 2019 is the year of the comeback.
Well, our board has been very supportive of our dividend policy. We've increased the dividend 15 of the last 16 years. We really believe in our business. We really view this as a disruption. And let me remind you that the liquidation didn't end until the end of June of 2018. So we only had 2 quarters, our 2 most important quarters, to clear that inventory that we were putting in the market up against liquidated inventory. For example, on Nerf, that liquidation, because of its strong support by Toys R Us, led them to liquidate 2 million units of Nerf product at low price. So obviously that's competitive with product we're trying to put in the market. But after the first quarter, 2019, this is the last quarter where we shipped Toys R Us in the United States last year, we move forward. So everyone should note that we did ship product in the first quarter of 18. As we move forward, 2019 is all about growth and expansion of operating profit margin, new initiatives and innovations, an incredible entertainment slate led by our own brands. We launched Power Rangers in the second quarter. It's a brand we acquired last year. We're very excited about a new original television series. Our retailers are very excited, and that's going to be a big global initiative for us. It'll roll out. So again, we'll get back on that trajectory that we had been on and a track record our management team has accomplished over the last few years.
One last quick question. Is there room for a resurgent Mattel and Hasbro?
You know, it's not a zero-sum game. You know, the industry has been growing over the last number of years. Obviously, it went backward last year. It was really the worst year, according to NPD, in the last 10 years. We've seen the industry grow. The projections are low to mid-single-digit growth. We've said we can grow mid-single digits as we move forward over time, and double-digit earnings of what we've been able to create. So we're very excited about what we have, the lineup that we have, our partners at Disney, an amazing array of new initiatives coming from them, and movies from Avengers into a new Star Wars, and of course Frozen at the Thanksgiving period. So excitement for our partner brands, which represent 20 to 25% of our revenues, and then also for our owned and operated brands, which is the 75% of our business. And so we're very excited about 2019 and 2020 and beyond.
Well, I don't blame you, because that's what happens when you see a shortfall and the stock barely goes down. That's a sign of a bottom. I want to thank so much Brian Goldner, Chairman CEO of Hasbro. You see why I want to stick with this stock. A lot of great things going on here. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.